we don't want to see it drop too far too fast, but it did feel like it had gotten ahead of itself, especially with the kind of the rise in what I would consider the sillier stocks, like people buying the bankrupt Hertz car rental stock. I don't really understand that, but they're doing it. And, sort of piling into airlines and cruise lines because they're cheap. Well, cheap is as cheap does, and let's see who survives. And I think that's the stuff that made me really nervous, right?
Yes.
But it feels like we're getting back to thinking about what these cash flows from companies are going to look like, and maybe we did get ahead of ourselves.
Michael, does it all come back to the Fed? Because a lot of the retail traders who are in this market now basically think as long as the Fed has the backstop, there's no way we can see the market really collapse.
I'd say it's fair to really make the comment, Kelly, that the Fed and the other central banks have driven the big rally in risk assets over the last few months. Now, the move in the last couple of days, is that due to the FOMC? Is it due to people saying, hey, things have gone really well, maybe it's time to cut some risk down? Probably a bit of both, frankly. And also the comments from Chairman Powell that the recovery is likely to be prolonged, pretty slow. To some degree, he dismissed the really tremendous employment report last month. So I'd say a combination of factors, but the Fed's got to get a fair amount of credit and maybe a little bit of blame as well.
Michael, it almost sounds like you also think that Chair Powell needs to smile now and then.
Well, it was a blowout jobs report, so at least being a little bit more upbeat about that probably would have been a good thing. But still, the Fed has put in place so many programs over the last few months, and generally they've done their job. They've provided a nice circuit breaker, if you will, given a tremendous amount of support to the credit markets. Interestingly, if you look at Treasury yields, we hear all this talk about equities going wild over the last few months. Treasury yields have done nothing. Actually, they're down. If you mark the 10-year Treasury today, it's about 9 or 10 basis points lower in yield than it was when the S&P hit its bottom back on March 23rd. So
wow.
The Fed really, I would say, has well locked in rates. It's an amazing comment, frankly.
Kim, let me bring you back in. For those who say, OK, well, maybe I don't need to be in the silly stocks. What are some stocks that I can feel comfortable being in, even if they do go down another 15 or 20% because the market, slips on another banana peel?
Sure. Well, I think you need to understand that the name or the companies that you're going to buy have to have a longer-term story. What I'm looking at is technology, because it is the thing that gives companies and people productivity. And something that intrigues me is 5G. It's going to be a long rollout. We don't really know what the killer app is yet, but we know that the service providers are certainly going to start laying the groundwork and putting the technology out there.